Hey, what's happening, YouTube? Hope you guys are doing well today. Let's do a little Saturday video. What is going on? So, let's talk about trading. I had an interesting week. It was kind of like a roller coaster. So, maybe I'll title that video, This Was a Roller Coaster. So, roller coaster week. That's trading for you. Honestly, up and down, up and down, up and down. Until you nail something, and then you're on your path for a while, and then you make one mistake, and then you're back to the roller coaster. So, what are you going to do? All right, so what you're looking at here is my results for the week, but this is a mix of paper trading and live trading. So don't look at these 2 days with these huge profits because that's paper trading, all right? So if you want to see my actual trading results, let me just show you 1 second. So basically I traded Monday through Wednesday and I had a negative week. And I'm holding a position that I'm still holding, in fact, and we'll talk about that maybe later. So minus $87. Negative average return, and we have some work to do, definitely. All right, so then if we look at the paper trading for Thursday and Friday, I had some nice trades, in fact, but I was trading much bigger lots. But generally what's more important is the average return and the win rate. So the win rate was high, barely any losses, and the return was positive. So that's generally what's important. The numbers not so much. What's more important is your overall profitability and everything. Again, what really matters anyways. Okay, so let's look at a few things here. So maybe we can look at some tape from Friday. I wanted to actually look at some price action from Friday. Yeah, so I'm still holding that short at 92.50 on the Nasdaq, that small position, and we'll see what we get next week. I kind of like the price action that developed Thursday and Friday of this week. The bears generally were in control for the majority part of those sessions. You could say I'm a gambler for holding it, but again, we'll see what we get next week. And I want to talk a bit about markets and how, the buy the dip mentality has been like just ingrained in us at this point. And I just feel like with the hype of the S&P 500 coming close to all-time highs, I just feel like it's too good to be true. Anyways, so we don't really need to talk about that. So let's look at some price action. All right, we'll look at what actually happened here. So this is a recording of my screen yesterday, in fact, and I was watching the market open, and the market was coming up to test these 200s on the Nasdaq. And I noticed right away that as we opened, we were in a downtrend off the open. I was actually short pre-market, and then I covered the majority part of it here. Again, this is just fake money trading, but I had my reasons for taking these trades. So we pop all the way up to 200 and then sell off from there, and then kind of try again, head on lower to the 60 mark. This 60 mark is a point of control if you zoomed out and looked at the volume profile. And again, I received an email of a guy saying, hey Chris, your chart sucks. Why do you use this crappy 30-second chart? Well, I'll be honest with you, I don't use this chart for anything other than executing my orders. The other thing I use it for is sometimes I look at the moving average because it provides sort of like a mean reference point. And again, that's a different topic, but I like to use moving averages just for that reason. But other than that, I don't use this chart for anything other than execution. All right, so he's telling me, use a 5-minute chart or use an hourly chart. Yeah, I do use that. But this chart is just for executing, scalping. Again, my eyes are here majority part of the time. So look at how the market came down to the 60 and then started rallying. 60 was a point of control. Again, bounced right off of it and starting to trade higher. Now look at how it trades coming close to this 200. Market's pretty optimistic. And actually, let's just spend some time watching the tape real quick. And I'll just show you an example of how the bulls are getting very optimistic about this market and how they get trapped. So look at how we're trading here. We're seeing a lot of green on the tape approaching this 200. And the bulls are trying, right? 200 is a key area. So right there, we tagged it, and then sellers answered right away, and we dropped 5 points from the level. So that's a sign that the bulls are not really having a lot of steam to continue buying up there. So we tried it again briefly, and now we're trading lower again. All right, you can rewind the video if you need to watch that again. So we're seeing some sellers hitting in, but we're not really trading much lower yet. And again, we're still playing with this 200 to like 95 area. And again, I saw that action at 200 and I said, that's kind of weak. If we're not going to see any more buyers above 200, that's a good short right there. So I said, I'm going to get short, or I'm going to add to the short. And again, fake money, but whatever. It's price action. And that was keeping me pretty strong biased of the fact that we came up to this area here and we were pretty optimistic going into that. And now the sellers are starting to take control. So I'm just watching here. We're holding the 90. Let's see if we can fast forward it a little bit. So there we go. We have another attempt. And we bounced off this VWAP here. Yes, institutions use VWAP, but also retail traders look at VWAP, meaning that it's full of baloney in my opinion. All right, so we bounced off this VWAP here and now we're trading higher. I'm just watching it, right? You have to watch the bulls as we trade above the 200s. Okay, we had a pop to 204.50, 205, 206 and a quarter. And now watch this. Okay, sellers are kind of trying, but nothing notable. And again, this is a key area right here, 200. So when price comes up to key areas, you have to be watching the tape. So there we go. We popped up to 207, rejected it, and now we're back to 202. So it's like, all right, interesting. We had a lot of optimism here, and now the sellers are starting to answer. So what's going to happen here? Remember, a lot of traders are just trying to buy breakouts all the time. So you have to be noting that it's that generally markets are mean reverting when we're in trading ranges, right? So a lot of these extended moves, people are going to jump on them, but then they have a high chance of failing. So you need to be looking at when they fail. So there we go, trading under 200 again. And at this point, seeing all this red on the tape, you want to see more of that, confirming that we're going to probably fail this 200 area. And again, I'm interested in staying short here as long as I keep seeing these sellers. So look at that, pretty awesome move down, trading these 96s. I added to the short, and then we slowly trade lower. Try again for that 200. And again, it's all about this 200. We try it again. And if you look at the chart, because look, I always look at the chart for a reference point about how obvious things are or what kind of pattern is forming that's going to get retail thinking a certain way. So look at this and you can see that we're kind of in this ascending sort of pattern. And again, it looks kind of bullish, right? We bounced and we bounced off of here. So we're pretty bullish, right? But order flow says something different. That's why I prioritize the order flow in terms of my decision making. But I will look at the chart to see if there's like a certain pattern or a sentiment that's being portrayed through the chart pattern, right? Because remember, a lot of retail traders are looking at these chart patterns to find trading opportunities. But again, order flow is going to be, for me at least, the #1 catalyst. So I'm seeing this bullish on the chart here. I'm seeing this acting bullish on the chart, but the order flow is suggesting that we're rejecting this 200. So I'm comfortable staying short right here. And again, a lot of bulls are into this. And if you're watching this action, you would have seen bulls just keep trying to buy these dips. A lot of green on the tape, green, 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 but we're not trading higher. So, you know, as a short, you want to see that combined with the sellers answering, right? If there's no sellers, then obviously we're going to trade higher. So there we go, tested it again. And the sellers are back, right there around that 203. We tested it, and then more sellers answer. So there's a seller waiting there. And as long as there's a seller waiting there, sooner or later, we'll trade lower. And these bulls here that are trying to buy this dip are going to be trapped. And again, it's just an assumption, but these are the things that you have to think about when you're constructing these trades. So there you go. That's real selling right there. You saw that? So now we're pulling under this 90. The longs are starting to realize, okay, I might be trapped here. And then we are bouncing again off of that VWAP. And again, fake support. This is not real support. You have to be cautious of things like VWAP because a lot of traders are looking at that. Always be cautious of the things that a lot of traders are looking at and things that just look so obvious. So, you know, you got to be skeptical of what is obvious on the chart. And again, prioritizing order flow. So again, another bounce right there. Another bounce all the way up to this 200. These kinds of price moves are the kinds of price moves that will accumulate traders in the market in one direction. In this case, long. So we have one big bounce, buy the dip, and buy the dip. So we're accumulating a lot of long trades here. So now we're still watching these 200 offers here because remember, there's a seller waiting here. So we pop again up to 201. And now's the moment of truth, right? If that 200 offer is not going to lift, then these bulls are going to get trapped, in my opinion. So we're still seeing more selling here at this 200. We rejected it down to 95. And again, this is what you want to see if you want to stay short here. And there we go, more sellers pulling those bids under 90. And now longs, if we drop this VWAP again, and now longs are starting to think, all right, well, you know, we can't possibly break lower. That VWAP was just great support, wasn't it? Well, think again, buddy. You just got trapped because there was a seller at 200. So now we're trading lower. Longs are under pressure, and that is the short trade. So pretty much a lack of support in this general area. We might see a little bit of a retest. So we pulled back down to 80, retest this range. And we have to always watch the retests, right? NASDAQ is the kind of market that will have a break, and then when it retests, you want to see if the side of the market that was broken is still defending on the retest, right? Because you can get a break, no follow through, and then we end up right back in the trading range. That's called a true failure. But in this case, it would be a retest because we did in fact break under this level that a lot of people were watching. We came up, retested it, and now we're starting to trade lower again. So that's an example of them defending on the retest. And there we go. We trade much lower after longs realized they were completely, well, screwed. And then I took profit on that short right there, or partial profit. So again, we're coming back down to test the 60, which in fact is a volume point of control. And this time we test it again, and then now it looks like we're starting to trade a bit lower. And that's the end of the story. All right, guys, so that's going to be it for this video. And I hope you learned something. If you have any questions about order flow or trading, let me know. And I will see you in the next video. Take care. Bye.